Chris, you've just released your full year results. What are the headlines?
We're very pleased with this year's results. The obvious main headline is total return of 17.7% for shareholders. That's made up of a capital return of 12.5% and income return of 5.2%. Those are good numbers, and we've outperformed the market. In terms of how that's made up at a property level, we've seen property growth, that's growth in the valuation of our properties, of almost 7%. When you take into account our gearing, which obviously increases that impact, that's where we get up to that total of 17.5%. In terms of profitability, profit of £256 million, that itself is about 10% up on last year, if I take into account an adjustment associated with a release of reserves.
What's driven that performance?
It's really been a combination of factors. The first and most important thing is the sort of property that we own. It's property that's in demand from investors around the world, but it's also a function of the asset management and efforts and initiatives we've put into place. And in that context, in particular, development's obviously been an important factor for us. But overall, we tend to focus on really 5 separate things, although they're connected, but 5 distinct things. That's a focus on income and driving income growth, a focus on capital values and making sure that capital values, if you like, protect wealth, but also increase wealth over time. That we focus on incremental opportunities to add value, and development, as I touched on earlier, is a great example of that. On top of those 3 things, it's a matter of looking at our cost base, keeping our costs under control. If we do that, we can drop our profit or our revenues to the bottom profit line, and that's good for investors. And finally, we're a big company. We have scale and we have financial strength. And part of our job as management is really to drive that scale, to take advantage of that scale and financial strength. And that's what we do.
So what are the highlights?
In particular, I'd highlight the fact that our London business has been very strong over the course of the year. Couple of reasons for that. One, we identified early that there was going to be an increasing demand for high quality offices and not much supply. And so during the course of last year, we pressed the button on a number of high profile and very important developments right across central London. And those decisions taken in good time, in a bold way, when others weren't prepared to make those decisions, is now really starting to pay off for us.
It's a very competitive market in offices. What are occupiers looking for?
We're seeing a shift in what occupiers want. There's a great deal of focus on the quality of the environment. There's a great deal of focus on the environmental characteristics of buildings. And those things all play to our favour. Size, scale, footplate, all those things are really important. And what we've been really working on in our development program is to make sure that we can deliver what clients want. Now, in its extreme form, that can be something like a real design of a building in conjunction with a single occupier, and I'd use UBS as a great example of that. We're delivering a building which absolutely meets their requirements. There's a very long lease because they're going to occupy it for a great deal of time. It's got tremendous environmental characteristics. It's a very efficient building, but it also really fits what they need. Very large trading floors, which match up with their business. Then if I move more broadly across the estate, then say at Leadenhall, what we're delivering is an iconic building, but which will nevertheless give great space to potential occupiers.
On retail, it's still very difficult though, isn't it?
The UK consumer is having a tough time right now, but we know why that is. But consumers are still shopping. And at the same time, many businesses are looking to grow, and certainly to grow in the right places. And from our perspective, disproportionately, if you like, we are in those right places, right across our retail business, right across the country. And sometimes people talk about there being a north and south divide in this regard. That's not our experience. For sure, London's doing very well, but away from London, there are good stories right across the country. And again, we're able to benefit from that. We've seen our occupancy continue at a very high level, virtually full, And at the same time, our rental values are increasing, unlike the market more generally, where they continue to fall. And that momentum, that sense of increasing rents, picked up in the second half. So all those reasons are grounds for confidence for the future.
Have you been seeing investment opportunities in retail?
We've seen some investment opportunities in retail over the course of the last year or so. One that I'd highlight was the purchase we made earlier in the year of Drake Circus in Plymouth. It's a brand new, modern shopping centre, and one where we feel it fits our criteria, if you like. It's locally dominant. Retailers can make money there. It's got good footfall, all those sorts of things. We've also been investing in a number of other places, including Barnstaple, including Basildon, and we may well look in the future too.
What about looking ahead? More of the same?
We're optimistic about the future, and that's really a function of a few things. In the first place, it's about the real estate that we own and operate. And in both our businesses, Central London offices and in retail, we're in the right place. And we've seen that in terms of our office business, where we've seen rental values going up. We've actually seen the rents we've achieved above those rental values. And in retail, tougher for now, for sure, but at the same time we're seeing shoppers increasingly concentrating in the sorts of location that we operate from, and equally those are the places that retailers want to go to. So it's those things. Now on top of that, of course, we've got the benefit of our development program, and the great thing about that is we're starting to see the benefits of that kick in. You'll have seen recently, for example, we were able to announce preliminarily that we were in agreement with Aon to take a big lease on our building at Leadenhall Street, and that in and of itself is very good for us, but equally it gives us a lot of confidence across our much bigger development portfolio in terms of what occupiers like about our buildings and the fact that they're prepared to pay for that, and that's great.
Chris Grigg, thank you very much.